Hello and welcome to another episode of the Sunday segment, a place where I break down the three biggest financial news stories of the week. This week we're going to talk about Tesla Battery Day, what the company announced and how the market reacted. Next up we're going to talk about Nike's bumper quarter and how this is a sign of the changing face of retail. And finally, we're going to talk about leaked documents which highlight how banks such as HSBC and J.P.Morgan enabled criminals to funnel $2 trillion worth of dirty money around the financial system. So let's get going with the video. As always, before we start this video, please make sure that you hit that like button and hit that subscribe button so you don't miss out on any further videos. First up, we're going to talk about Tesla Battery Day. When companies get really big and launch big products, they normally have a big showcase event. We've seen this multiple times when Apple launches a new iPhone, iPad or Mac, and it looks as if Tesla are jumping on the bandwagon. This week they had a day which they called Battery Day. It was a day for shareholders to see what the company has been involved in and what development they're going to be doing into the future. As always, it was a big showcase, big presentation from the likes of Elon Musk touting what the future of the company is going to look like and what products are going to come in the next few years. Elon Musk even touted the day as a day that will blow your mind. On the day, some key pieces of news were announced, such as improving the range on the battery, a new car which will hit 200 miles an hour and be one of the fastest accelerating cars in the world right now, a new plant, a move away from cobalt, which the mining process for cobalt has highlighted a number of human rights issues, and a new car which will cost less than $25,000. All of these things seem rather sensible to me and seem rather measured by the company. None of them are huge scary goals and actually seem quite achievable for the company. However, the market seemed to react in a different way after hours, with the company's shares dropping 7%. I've spoken extensively how Tesla shares are extremely expensive at the moment for the value that you're getting. This is not to say that I dislike the company, it's clearly the leader in the EV space. However, it has suffered from profitability and not hitting production targets. However, the announcement this week on Battery Day actually seemed rather measured and rather sensible for the company. It didn't promise the earth, and actually the targets were quite achievable for a company of the scale of Tesla is right now. So one question which I actually think is, what are investors thinking selling their shares when they hear that news? To me, it makes absolutely no sense whatsoever after hearing some solid, measured targets from someone who's clearly trying to keep the leading position in the EV market. I get it, people think that Elon Musk is God incarnate, that anything he touches turns to gold. But what were you expecting? Flying cars that print money and make you more attractive to the opposite sex? What you're telling me is when a company comes out with sustainable growth targets that people sell out, it just doesn't make sense. To me, it shows that there's a certain percentage of Tesla investors who don't even know why they're investing in the company. They just want growth, and something bigger and better every single year, which doesn't really make sense as this is now an established company which is selling hundreds of thousands of cars every single quarter. To me, this just highlights quite how dangerous this stock can be for your portfolio. Yes, it's a great company. Yes, this is a game-changing company. Yes, this is the market in electric vehicles. Yes, the founder is a visionary. And the cars actually are really, really nice. So I can't fault the product. The one thing I do fault is that the share price to me just seems far, far too high on a valuation metric. And also the people who are buying Tesla and are fanatical about Tesla seem to change their mind on a whim, which just means that this stock is so volatile, it's really hard for investors to really establish, are they getting a good deal, are they getting a bad deal, and if they put too much of their net worth into this high-risk stock, they can also lose a lot of money. I'm not saying you shouldn't invest, however, if you do invest, you really have to manage your risk here, because this is one company which is highly risky, not through the fault of the company, but mainly through the fault of other shareholders who just get far too excited and seem to change their minds on a whim. So just be careful when investing. Talking of alternative fortunes, Nike's share price popped 13% this week after a bumper quarter where revenues topped estimates by over $1.5 billion. This was seen as a massive surprise on Wall Street. These latest results were a strong turnaround from last quarter where Nike's share price sank as they were saying that they were heavily affected by the pandemic after they had supply issue from China and had to shut stores. However, this bumper quarter led shares in Nike to a 15% gain year to date, which is quite incredible given that they're in the retail sector. Ultimately, this comes down to two main reasons: online sales and sales in China. Nike have been one of the main beneficiaries as they've pivoted to online sales, with 82% of all sales this quarter coming online. This is a great achievement for a company that has sold the vast majority of its products in bricks and mortar stores. And another big change is that growth in China has been incredible. This quarter, revenue in China grew by 6%. This cannot be underestimated, as China obviously is the biggest and most populous country in the world with over 1 billion people, and shows the strong market that Nike have in China. And let's not forget how China is further along in the pandemic recovery than the rest of the world, and especially the US, where people in China now seem to be going around their day-to-day business like normal. What is probably clear is that Nike have been benefiting from people now working from home. Because people haven't been going to the office or going to gyms, they're having to work out at home, which means they've been buying workout gear to, go for a run or go for a walk outside. However, what is more important is their pivot to online sales. Retail, as we all know, is really suffering right now, as people aren't going to shopping centres, shopping malls, or down high streets. By moving their sales online, Nike are really benefiting from people just having to live at home, work at home, and do everything delivered to their door. So any investors and anybody out there looking to invest into retail companies really has to consider their online presence nowadays. This movement to online is going to be a real drag for companies that are heavily into bricks and mortar stores. If you're a retailer and don't have a strong online presence, then it's going to be rather difficult for you to make any money, especially this year and probably going into the future, as people change their behaviors to buying more and more things online. And let's not forget about the real estate sector. As more and more people are buying things online, it's not necessary for all these retailers to have physical presence in stores. This will not be good if you're an investor into real estate that holds lots of retail assets. So that's one to consider. And let's not forget about China. Any company that has extensive sales in the country will probably be doing really well. As China is further ahead in the pandemic, they are getting back to normal and they are working and living as they were before the pandemic hit. Also, as the most populous country in the world, it's such a huge market. Other investors such as Ray Dalio is heavily involved with China and really touts it as the next big superpower and probably overtaking the US. So this is something that we really have to see, but if any investor is looking at any company and they have heavy exposure to China, then I'd see that as a good thing. However, you obviously need to do your own research. And when looking at a company that sells products, look at their sales channels. Are they online or in-store? And also where they sell them. That can be a big determinant on how much profit the company will make in the future. And leaked documents this week show how the world's biggest banks have enabled criminals to move $2 trillion of dirty money around the financial system. This week, leaked documents called the FinCen files were over 2,500 different files highlighting how banks have enabled criminals to move money, which they made from illegal activities, to be transferred into the financial system and moved around the world. Two banks which have been highlighted include HSBC, which has moved millions of dollars for criminals, and J.P.Morgan, which has apparently allowed $1 billion to be transferred into the financial system, which comes from a mobster, which is on the FBI most wanted list. Over the last decade or so, we've seen a number of high-level financial leaks from a number of financial companies, such as the Panama Papers or the Paradise Papers. These were focused on individual law firms, enabled people to use offshore accounts so that they really just don't pay tax. However, this FinCen file leak is different. FinCen, wow, that is actually quite a mouthful. This FinCen file leak is completely different because it highlights a number of banks and actually a number of high-profile financial institutions such as HSBC and J.P.Morgan. It raises a number of concerns about individuals and companies that are operating in this world, and also questions why these banks haven't done anything sooner. So we all have to understand why this really matters. Criminals want to take this dirty money that they've gained from illegal practices and somehow wash it so that it's clean, so they can use that money to buy financial assets or other assets legitimately, such as houses, cars, clothes, etc. However, it's clear from this leak that some of the world's largest banks have actually enabled this, which makes it seem really strange, because if you've tried to transfer any significant amount of money, such as buying a house or buying a car, which is over a few £1,000s, you go to a bank and they ask you a billion questions about What's the money for? Who's this money going to? Do you know where this money's come from? How did you get this money? Why are you transferring it today? Who's your grandma? What's the cat's name down the road? Is it called a scone or a scone? Banks give you all these difficult questions which you have to answer on the spot just to transfer your money to buy something for yourself. So how on earth are these criminals doing it? When it comes down to it, it's just money. Look, these criminals aren't transferring a few £1,000s here and there to maybe buy a small buy-to-let property or buy a house. These criminals are transferring millions and millions of dollars. If you're transferring millions of dollars through a bank, someone somewhere is going to be making money. They can quickly turn a blind eye and allow that money to go straight through. If you're working in a bank and on your desk you see transfers of millions of dollars, then someone might just come down from head office and look and say, hey, look, this desk is doing a great job. Big bonus for you guys. When money's involved, people will do whatever they can to get more money. It's not good, it's not healthy, it's rather corrupt, but hey, most people have a price. And this means that there are some bad apples in a few banks can enable millions of dollars to be funneled through the bank's accounts. What you have to appreciate is that it's not everyone in every single bank. You'd hope after scandals like this, there would be implementation and regulation put in place so that this doesn't happen again. However, these guys are criminals. They get their money from illegal ways. So if they want to try and use different ways and different tactics to get their money into the financial system, they'll probably still get away with it. More regulation and more hurdles to get over won't actually really affect them. They'll just find other ways to put their money into the financial system. In reality, it will affect people like you and I who will just want to buy things legitimately. Well, that's it for today's video, and I hope you've enjoyed it. If there are any other financial news stories which you found interesting this week, let me know in the comment section below. And as always, before you leave, please make sure you hit that like button and hit that subscribe button so you don't miss out on any further videos. And I'll see you next time.